Success is not a game of chance when you control the odds with your enthusiasm, persistence, and drive. Every day, 10 to 15 minutes, that is all we ask if you want to learn how to master these charts. It's not super complicated, but it does take some persistence on a daily basis when the markets are open. 10 to 15 minutes a day, that is all we ask. We have a great training for subscribers. You can subscribe for free at chartingwealth.com. It is seek consistency and reliability, not complexity and quantity. You'll get a lot out of that. Now, let's jump into these charts. Thanks again for all book purchasers and Patreon members. We're going to start, as we always do, with the S&P 500 on the weekly chart. What do we see going on? Well, the S&P is down just a little bit for the day, and as we look in on the week, we can see this prior week had a high of 422.92. So far this week, 423.26. So even though it was down a little bit today, it is trying to move up as far as price goes. But the most interesting thing, we keep talking about this, we have going on 3 weeks now since we had that weekly vertical crossover, price percent oscillator pulling away from the red signal line. Slowly but surely we see this divergence with price versus the indicator, and the derivative oscillator also losing momentum. So that tells you there is nothing supporting these small incremental up moves. On the 2-day, still not enough energy for things to cross over going up. We can see the prior green candle that was a Friday, Monday candle. This is the Tuesday, Wednesday 2-day candle that's just finished drawing. But again, we've got nothing supporting this as far as our price percent oscillator goes. Derivative oscillator has gone positive a little bit. Look at the half-day chart up in the morning, and then of course we can see where things rolled over in the afternoon. That price percent oscillator also cocked over going down on that half-day chart. And again, we'll try to redraw that a little bit. The derivative oscillator is still positive. So again, market trying to move up, like I said, down a little bit for the day on the S&P 500. I think it's 0.14%. The light I am in right now with the glasses I have, yes, 0.14%. There we go. That's what it was. So that's where we are with the S&P. Let's look at the NASDAQ. It is up 0.02. Now that's not 2%. That's not anything but a barely little move up. 0.02%. What do we see going on here? We do have a green candle drawing for the week. Price percent oscillator still negative. Derivative oscillator still negative, losing some downward momentum. Go to the 2-day. We did, and we noted this on the past candle. We have a 2-day crossover going up. It's not a recross. It's going in the opposite direction of the weekly. And again, we've already put that trend line in there. Derivative oscillator gaining a little bit of momentum. Price percent oscillator pulling away from the red signal line. That's all fine and dandy. We'll see just what happens with the Qs, if indeed this is going to end up failing at some point, rotating back over for a 2-day recross. We'll wait, watch, and see where things were up in the morning like they were yesterday, and then lost some of that energy in the afternoon. Price percent oscillator on the half-day chart is positive, heading down. Derivative oscillator losing momentum. So again, we'll continue to watch, see how things play out. Do pay attention, though, on the Qs with these latest moves. Still haven't hit the highs that we saw back several weeks ago. That would have been back in April, mid-April, at the end of April. And yeah, well, those 3 of the 4 weeks in April hitting those highs. So that's where we are with our stocks. We'll continue to see what's going on. Look at what's going on with bonds, up 0.88%. We have the biggest green candle we've seen in many weeks on bonds. Remember, bonds crossed over going up back on the 30th of April, really been sliding sideways, and this latest week is the first time bonds have really poked their head up and started moving up nicely. Price percent oscillator pulling away nicely from the red signal line. Derivative oscillator gaining momentum. Go to the go to the 2-day chart rather. That's where we can really see a big green up candle with that price percent oscillator spiking away from the red signal line derivative oscillator heading up. That's nice to see on bonds. And of course, where are we on the half day? That half day chart continues, and you can see what it has done the last 2 days. Up in the morning, slowing down in the afternoon, not reaching those highs in the morning, in the afternoon. But again, we'll continue to watch and see how bonds shape up. And as I've said over and over, typically bonds are usually a safe haven when stocks aren't doing well. Stocks continuing to knock up, having some difficulty doing that with those negative price percent oscillators. Bonds doing what you would think bonds would do when the market's having trouble. So we'll see how all this ends up playing out. Let's look at gold, down 0.19% for the day. So as we look at gold, we again can see where after these 5 weeks of up movement, really 4 strong weeks, this last week not so strong, the price percent oscillator has lost some of its momentum, derivative oscillator too, but price percent oscillator is still heading up, just a red open box candle for the week, not a strong red down candle. We go to the 2-day on gold, and again what we're really seeing is where gold had peaked and then sort of this sideways slide. And on the 2-day, still positive. That price percent oscillator is heading down. Derivative oscillators lost a lot of momentum. Half-day chart, we saw where gold really pounded down on Thursday of last week. That was the 3rd in the morning and the afternoon. And then since then, the next 2 days were up, and then these last 2 days sort of sliding sideways at the end of the day on Wednesday, down some. So we'll continue to watch, pay attention, and see how these things go. So let's move on lastly to Bitcoin. What do we see happening with Bitcoin? Bouncing back a little bit. 10.52% up for the day after that pounding it took yesterday. Again, we can see where things maybe had floored and then, of course, rolled over down quite a bit. Price percent oscillator, derivative oscillator heading down on the 2-day. Sorry, on the weekly. On the 2-day, we can see where we hit that low. Again, the low for the week so far, down to 31,808.76. Derivative oscillator losing downward momentum. Price percent oscillator still moving down on that 2-day chart. And on the half-day, that is where we see the up movement during the day, again, where things were up 10.52%. So that's good to see things trying to swing back around on Bitcoin. But 1 day of up movement does not mean things have changed on the 2-day or on the weekly. Still lots of downward pressure on Bitcoin. That's where we are, folks, as we end the day. If you don't have our book, you need an autographed copy. We have one waiting for you. Thank you to all the book purchasers. And of course, Patreon members get all sorts of great stuff. The free 3-part Options Made Simple training. The monthly question and answer call-in session where we help you with the questions you have and backtrack the stocks and ETFs you want to practice, trade. And of course, what do you get? 20 of every week, weekly vertical crossovers on the S&P. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.